everyone, welcome back. So today I want to talk about how to read stock chart for beginners as it was requested. So there's basically three methods that investors, traders are used. They are fundamental analysis, financial analysis, as well as technical analysis. So today I'm gonna focus on the technical analysis part and to talk about how basically we can use a candlestick and the indicators to help us make better investment decisions. So now let's get started. First, let's talk about candlestick. So basically, green candlestick means there's a bullish trend, and the red candlestick means there's a bearish trend. So the reason that is the highest point of the bar shows close price and the lowest shows the open price. So the green candlestick means that the close price is actually higher than the open price. So the price has been going up. As we know that price reflect the power of bulls and bears, and in this case that means there's more bulls, or bulls have much bigger power than the bears. As for the line above and below the bar, it can show the highest price of the day or the lowest. So if we are looking at the daily chart, each of the bars shows the situation of the day, and the whole range of these candlesticks can show the situation in a period of time. Some of the special type of chart can including hanging man, shooting star, hammer, and inverted hammer, because those candlestick is very unique. The bar is very little on the top or bottom, and the line is very line. Usually the line is more than like 2 to 3 times of the bar. Take hanging man as an example. The stock price opened at a relatively high price, but closed at a lower price. That shows after the battle between the bulls and bears, finally bears had the advantage at this time. So that also applies for the bearish trend. We can also see that the lowest price level is pretty low as the line behind the bar is very long. That shows that in one point of the day, the bearish power was overweigh the bullish power. But finally, bullish power has pulled back a little bit, but still not as powerful as the bearish power. So it ends up with still a lower price. The same thing would apply to the shooting star candle. So we can see that the close price is even lower than the opening price. And although there's a pretty long line above the candle, that shows that at one point of the time, the bullish has been in advantage over the bearish power. But finally, the bearish power still wins. And that's the opposite case of hammer and inverted hammer, where the stock price open at a lower price and close at a higher price. Although there has going to a lowest point where the bearish is at advantage, but it's finally win over by the bullish at the end. So now let's look at an example of Amazon's daily chart, where I found two hanging man signal. So the first hanging man candle, after that the stock price has going down. The hanging man becomes a turning point from going up to going down. And when we look at the second hanging man, it also seems to be a middle between, like there's two waves of lines going down, and the hanging man candlestick just show the continuous bearish trend. Other than hammer, inverted hammer, shooting star, and hanging man, there's actually some other candlestick that can show the reversal pattern, and it may not necessarily come into the single candle, but it's also decided by like what's the candles before and after, so that here is a picture you guys can also reference. After we get an understanding about candlestick, let's look at some indicators. So there's several indicators that has been used mostly by the traders, like moving average, RSI, volume, MACD, Bollinger Band, as well as support and resistance level, trending line, and some patterns. Take moving average as an example. It's the average price of a specific period, and there's usually 20-day moving average, 50-day moving average, and 200-day moving average, as we can show in this picture of yellow, blue, and purple line. As for which line to look at, it really depends on whether you have short-term investment goal or long-term, as well as your trading strategies, whether you take profit from the daily volatile or you really look at the long-term growth. So if you want to do a weekly swing trading, you'll probably want to look at the 20-day moving average, as it has shown the average price level of the executive 4 weeks. So from the yellow line, we can see that Amazon stock has been increasing sharply first, and then it has been really flattened for a while. But if we look at the purple line, which is a 200 moving average, we can see that the overall trend is going up, so that in the short term it may be like going down, or it may be just going flat, but in the long term it's still an upward trend. So by looking at the simple moving average, we can know that whether the current price is at a lower level or higher level. And if we are a swing trader, we probably want to buy at a point below the moving average and sell at the point above the moving average. The second indicator a lot of traders are using is volume. So volume can show the current emotion of the stock market. The high volume means that people have a strong opinion about specific stock, and either they want to buy or sell the stock. So the trading volume at that point would be higher. For example, in this graph, NIO has some really big volume recently, and we can see that at those high volume point, the stock price has been going up. So comparing with the volume in April, the current volume has been significantly higher, and also the stock price. But high volume doesn't necessarily mean a good thing, because a lot of times when a large amount of retail investors rush into the market because of fear of missing out, so sooner or later, those investors may realize the irrational behavior, and then the volume would be probably going down, as well as the stock price. So in those cases of extremely high volume, it's not sustainable, so the stock price will going up temporarily and then going back down. Moreover, there's other indicators like MACD and RSI. These two indicators are also widely used by traders. As for MACD, it can show not only the volume, but also the major power of bulls or bears. Like the green bars, which shows that currently the bulls is dominant in the market, so the price will going up. And the red bars show that currently bear is dominant in the market, so the price will probably going down. And we can also look at the intersections between the green line and the yellow line. So when the green line has crossed the yellow line from upward to downward, that shows that it's a turning point and the price will soon going down. As for RSI, it's an indicator to show whether the current stock is overbought or oversold. For example, when RSI is below 30, that means the stock has been oversold, so probably a good time to buy right now. And when the RSI is larger than 70, that means the stock has been overbought, so we may want to consider whether to reduce the position size or sell some of the stocks. There are some other indicators like support and resistance, trendy lines, and technical analysis patterns. Maybe we will cover in the next video. So yeah, today we have talked about the basic candlestick as well as some of the basic indicators. Hope you guys would find it helpful, and I will see you guys in my next one.